45 years of experience to help manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight's video will talk a bit about the inflation numbers coming out in the next couple of days, and once again, the no reaction to any tariffs that continues to be muted. Let's get into tonight's video. Welcome, everyone. Trying to get on time here lately. It's been a little interesting with the equipment here. I've just put in an order for a new computer, so that's going to be an interesting task, installing that. Anyway, welcome. Let's talk a little bit about what I think is going to be a non-event, but there's always surprises that happen. Looking in my rearview mirror, don't see anything of any sort that looks like is going to surprise the markets. There's no spike in oil prices. There's nothing in there, that's occurred that would trigger inflation. So we get the CPI number tomorrow. I think expected to be up 0.2. I'm surprised at that. So it might come in a little bit better than expected. And I just don't see inflation's kind of off the table right now, right? So the Fed doesn't want to admit, not that they beat it, but that it's actually doing good. Though they're still data dependent, and they got to watch these tariffs because that's going to have, inflationary effect. And there's no proof of that ever, not in the past or not currently. And if there was, there'd be a one-time bump, and things are all over the place. It looks like the EU's trying to come to the table to talk, so they're negotiating. And I always used to say, you might like Jimmy Dean's sausage, but you don't want to see it made. You'll never eat it again, right? So it says what we're seeing is the sausage being made, and it's pretty tough on trying to watch what's going on. So, we'll get the Fed next week, so we'll hesitate in talking too much about what's going on with the Fed. But for right now, we're just seeing the markets range bound. And I did get the sheet ran. I realized I put the wrong command in the sheet last night when I started it up. So that's why it didn't work when we were trying to get it going live yesterday. So anyway, I have it run. It's ready to go for the S&P, so we can take a look. But everything's getting range bound except for Bitcoin. We'll talk about that. Big explosion there. We've hit the 121 number I talked about several weeks ago, and now we're looking at 134 plus, and I'll go through those numbers by the end of the show tonight. So yeah, so nothing really material. I was looking, trying to prep is there any themes or anything going on? And there's nothing, everything's like very stable. There's nothing to talk about, So the tariffs, we came in, 30 handles last night. Should have just bought the open, hung on until even right now. I mean, we did get a bit higher. I think we got to 63.15 or so on the high on Monday's trading range, and we're off a little bit. We're off 6 handles right now, and it's just choppy, no real direction. So let's take a look at a couple of things. Let's talk about, since there's really nothing material, should be able to get through the show fairly quick, but at least we'll get through all the markets. And I'm going to take a quick glance at treasuries and the dollar, and we'll do gold and Bitcoin, and we'll just see what else comes up as I go through it. But it's mostly going to be dominated by just looking at markets and looking at the values. Even the database, I've already taken a look at that. Nothing's going on there. There's nothing anywhere. And it's funny, I was flashing back because I was talking about maybe 4 or 6 weeks ago, coming into the dog days of summer. Boy, are we there. We are definitely there. There's nothing material going on anywhere for anything. So what we'll do is we'll go ahead and take a quick glance at the database, nothing really going on there. Just give me an opportunity to chat about a few things, and we'll lead in and just see if we can get efficiently through all of the markets I normally cover. All right, so let's go ahead and let's go there. So database is very static here. We're at 75.85% bullish, and basically a rotation going on. We had roughly 250, I'm just rounding numbers here, new entries. And then we have on the exits, we had a little bit more, but we had 600 and it was actually 700, right at 700. So had negative rotation going on, but it's not material. And what happens when we get up into this 70 percentile range of the database, you're basically fully invested, and so you'll see this rotation going on. And at some stage, we should start to see a material liquidation go on, and then we'll see initial drops 68%, but down the key number, the next level, if we do start to see that, will be the 62 to 58% range. And that's where we typically will see some stabilization. I usually mention this because last year was really unique on the intermediate. We stayed above 61% for most of the year, and we saw the market just cycle and continue to punch out new highs. We know what can't happen coming into the election and the whole thing, and we had back-to-back double-digit years. And right now, we're trying to pull off another positive year, and that'll be 3 in a row, which we haven't seen that for a very long time. We might have to go back to the 80s. So, but there's nothing here, folks. So let's just go ahead and I'll go into the S&P and we'll start to break down some numbers here. This pattern that we have going here in the S&P, it's just this grinding pattern. We managed to move to new highs, but if we look at the algos, what they're projecting, where the dotted lines are here, they're still projecting higher prices into September. This could roll. The red dot I talked about last night is trying to roll down here, maybe get into 62.50. And I said, the fantasy is for a little correction, maybe coming in over to around 61.50 to 60.50 would be an extreme. Come down and test that 40-period moving average in this pattern. But there's really probabilities right now on that aren't real high because the 21-period moving average is still got a decent angle of attack of 0.23. So there's nothing there. So let's go ahead and take a quick look at the fact sheet here, and you'll see that for the most part the PPMs here are in neutral. PPM 2 is in maintenance mode, PPM 3. So we have that underlying maintenance mode neutral, which is basically what you should expect out of the patterns. Is when we look over here at the support lines here, when we get into support and resistance and the market grid lines, we're just going, right now it's predicting S1, R1 for tonight. That number is 62.97 with R1 63.21. So that's the projected range for today. And it's giving you the probabilities, 50% hitting R1, 65% hitting S1. We did trade down to like 63.01 a few minutes ago. I think the lows might have been just right at 63 even. So we're doing the same patterns that we've been going on. I mean, when I go back to the chart, I'll show you. We've been range bound for the last 7. If you look at the last 7 sessions, this perfect time to be writing straddle and taking the money. I used to call it stealing money, taking the premium and collecting premium during times like this. And we've been seeing this kind of stair-stepping ranges. I remember when we were down in 59 handle, it was 59.5 to low 60s, and then 61.5 or 60.5 to 61, and it's just been going up those levels, and here we are at 6,300. So it's been a complete grind from that standpoint. The let's come up here and just look at this is the logic, and this is what I was telling you folks. When you get your hands on this on any market, it's going to generate the a scenario around the data that you submit to these data sheets. And what like I was telling you last night, what I'm trying to do here is actually take some of the guessing game and trying to figure out all these nuances. I have shown you before the probability map, and I'm working on the next level strategy yet, going into very deep analysis of all the nuances and everything that comes to mind. I have a monster document that I'm working on right now, generating the prompt for the AI to understand these indicators. So the goal is so you don't have to taking the learning curve to zero, and you just plug and play with these when they get done, because you have the intelligence of the logic to help you understand. But this is what this is coming up with. It's just telling you, here it is. S1 is telling you all this stuff. Over here, the technical outlook, R1 is 21, and it's giving you some of the details here. And then it's telling you that S1 is at 62.97 to 63.21 is right now the projected range. And these are all used when we go back and look at these numbers here. Let me bring that back up. Sorry about that. When we come back and look at these numbers, all we're doing is these are pivot numbers. So if we take out R1, then R2 would be your next target zone. And you can see the percentages get, with our current environment, get very, this is only a 30% probability for it to get hit, 25 and 15 on 63.60s out of the market. On the downside, we still have some reasonable probabilities for it to go through S1 and trade down to S2, which would be 62.83, and there's a 70% probability of that. So we come back up here to this logic. It's basically walking and doing an executive summary of everything that it understands. And there's going to be updates to this file. I'm working on a membership site that you'll be able to get in there. You're going to need the indicators. And anyway, there's a whole bundle package deal. There's thousands of you that actually have the indicators, so that you already have most of the ingredients. You'll also have to have a cloud account. But this thing is really, really smart. It's smarter than me. That's a joke. But it is, because it doesn't miss anything. And there's always been moments in time, all of us, if you're doing any kind of discretionary analysis or trading, you're going to have these events where, like you slap yourself in the head and like, oh, I forgot to look at that one thing. This is not going to forget. And it's going to do these executive summaries and tell you what's going on here. There are some things, I'm just looking sometimes down here. Yeah, so this is really what's going on. So this is just with tonight, because when I generated these sheets, there was not very much volume because it was about 15 minutes before I came live, so not a lot's traded. But it tells you the range bound. Look at this. It stole my line right here. I'll highlight. Indicates summer trading conditions. So that's exactly what's going on. So as I've joked, this is like a virtual Bob. So let's go back to analysis. We're going to find out in the next couple of days, probably as we come in toward the end of the week, whether or not we're going to see markets start to roll over a bit here. We'll be watching that. The red dots are suggesting a little bit of a roll into the 21. And like I said, the 21 still got, but we're just looking at the sheet is in maintenance mode, which means the trend mode. Typically, that means that there's only about a 40% probability to decline below the value of that SMA. That's the point of these things. So let's go ahead and go to the NASDAQ. Same pattern basically at that little rolling. The interest, and this is always the case. When I mention this, I feel like I'm always repeating myself, but the NASDAQ has a slightly stronger profile. It's even stronger or weaker because it's leading most all the time from a pattern standpoint and from a volatility standpoint. And one of the things that we have seen, which is quite dangerous, it's the same thing on the S&P. So if I just bring up this, you can see the volatility has contracted. It's about as low as it gets right now. And typically when that happens, it suggests that we'll see a bit of a rollover. It's interesting that the NASDAQ has a little bump here on the red dots. And somebody was asking what the settings was, and I've been meaning to answer them. Let me just see if I can bring these up. They're not coming up. It always amazes me when I'm live, things don't work like they usually do. Let's just go ahead. And so all you have to do to set up these red dots, that's interesting. None of my settings pages are coming up. Unless they're bouncing up on another page. Hang on one second. Been having this thing where screens will, yeah. Anyway, so I'll do that later. Okay, so let's go ahead and look at the PPMs here. And I guess I will say this: my confidence in this computer has gotten very low, and it's being replaced by a monster. So I've got a Mac Mini Pro 2, but what I'm getting is a Studio with an insane amount of Apple Silicon, which is very powerful. But the bottom line is we're not seeing any acceleration. It's the same pattern, same story. There's really nowhere to go with this stuff. So if you have some questions, throw some out. So I'll hopefully be able to get to a question or two at the end of this. So make sure you put in some comments there that will be helpful for that. So let's go ahead and let's go to treasuries, because I haven't talked about those for a while. And this is pretty interesting because we keep bumping up around that 450 range, that upper band. And since I haven't covered it for a few days, you'll see we have a couple fib targets. We had 441, 448, 453 targets. But we're seeing once again we're trying to stall here in momentum, but there's enough momentum that could carry us up into the market grid where we would get 446, 48. We could challenge that 450 range and see this get hit. So we're definitely still seeing some patterns come in, even though we closed a bit off the high today at 43 after printing up the 45 level. But it's really narrow, and you can see the projections here. Let me blow this up. The lines, whenever you see moving averages, especially in real time, when they over here in this area where they're crisscrossing and the stack gets different than normally. Like typically if you're in an uptrend, you got the shortest moving average closest to the market action, then you got the medium and long or below. When you get into these ranges where they're crossing each other, that is a trendless. They're trying to find that next direction. And this is what we went through over here during this period where they were stacked differently than normal. The 21 was the highest, the 10 was the middle, and the 200 typically is in an uptrend is going to be below stuff, but below all the other action. But this is we're getting into forecasting the crisscrossing And that just tells us that we're coming into a potential trend change, or we're just going to be in this very choppy range. So whenever you start to see these things happen, they're telling you about what's coming. So you don't, even if you just had SMA 10, 21, 40s like I use, that analysis will help you a lot when you're in a transitional phase, and then you can take your expectations and build them into some of your technical stuff. And you have to realize whenever you're doing it, the nice thing about when I was showing you the sheet a minute ago with all the information on there, it's totally objective because it's not, throwing in how I feel or what I think's going to happen. It's all based on the math that I've told and that I've taught it. So it doesn't go into all of the elements that you and I go to when we look at this chart. Well, it feels like, the market's going to go up. And whenever you use the word feel or I think or those kind of things, those are the discretionary, subjective things coming out of you. That is, sometimes you have really good senses, sometimes you don't. And this is just a quick little trading note, is that's why you should keep some sort of journal about those ideas that you have and what the outcomes are. So if I'm thinking, hey, this is going to go up, I think the trend change is going to be up, and if you journal around that, you break down what things were actually going on that made you think that, were you right, were you wrong, and then you can start to help your trading decisions come up, because this discretionary trading, I've told everybody, is the hardest thing that you'll ever do. That's why I have 2 platforms with models and decision tools. No matter who you are, you need some really hard-coded tools. Back to the sheets, that's why the sheets are much better. Ultimately, that environment's going to transition from just day trade ideas, swing trade ideas, into more trending ideas and interacting. What I'm working on in the background is a more intelligent model that can take in different types of information to make decisions just as we go through in a trend mode. So I've actually even working on probabilities of patterns, and also from our stats, because we have tremendous database, trying to figure out what type of patterns that unfold and what the predictability of forward-looking returns, or if the trade's going to fail, all the stuff that you would ask. And I'm building that intelligence into the models. We'll see where it ends up. It's quite the project, but nonetheless, it's entertaining to me, and hopefully it'll be advantageous to us all for my effort. But the bottom line is the treasury notes are locked in a range. I've talked to you folks about that quite a bit. We kind of dipped down and we got into, I think, these lows right here, right at 420 level. So 425, 450 is the range right now. When we get closer to the Fed early next week, let's say a week from now, next Tuesday, I'll go into yield curve considerations and things of those sort. We'll go from there. Let me just look at something here real quick. Just looking at a couple of comments before I move on here. Yeah, so anyway, let's go on and let's go to the Dow, because I also have not covered that for a little bit. Yeah, we might get out of here pretty quick today. Here's the Dow continuing. If you folks have a good memory, and some of you do, some of you just like to say I said something I didn't. But in this case, and when we were coming back in July, if you remember, the algos were forecasting a bottom in the Dow, and that we were going to come back up into some of these ranges that we're looking at. And I'm just looking at something here. Looks like I'm missing the 200 here. Let's go up there and put the WTR 200 up. Here we go. Maybe it's up there and I just don't see it. Okay. Is it running right through there? I guess it is. Okay. So anyway, we're looking at the Dow in a forecasting into all the way into August, moving up and moving above 100, maybe 101, something like that. We do have some Fibonacci targets up here. We've satisfied the first fib targets. We're looking at right now at 98. Let me bring that up so you can see it. And I'm straining to see it. So, but right here, sorry, this wheel is oversensitive. Here we go. So I'll bring it up on the screen here. It's 98.48. That's low target. 98.19 is target one. We've satisfied that. 98.89 and 99.32. So, but you can see the forecast here is a decent uptrend. So the question is, does this mean we're going to break up? Just going to tie this together with looking at the treasuries. Does that mean we're going to actually tie this together and we're going to have the treasuries going up in yield, the Dow going up in price in reaction to the selling of treasuries? That maybe that's what's going on. Does that tell us maybe we've got a surprise coming in CPI or PPI in the next couple of days? I don't see it, but anything's possible. You have to remember that these numbers that we get all the time from these government agencies, they're all seasonally adjusted, which means seasonally manipulated. And sometimes what you'll get is maybe a seasonal adjustment or something that surprises the market. And the market's going to play off the headline numbers, always does. The algos are going to kick in. Even pre-algo world, where we didn't have, basically Twitter feeds and different kind of market feeds being fed into algos, but putting it into buy and sell models. Even back in the day, we would have those kind of reactions. The algos were us humans. But overall, the Dow index looks like there's a little bit more work, and then it wants to look like go on a bit of a run from maybe for a point and a half, maybe up to 150, maybe 101, up in that range. We'll see if that plays out. But when we were back here, I remember in July I said we were looking at forecasting up to the up to the 40. And for whatever reason, the 200 is not printing on this page. I'm not sure why it's not, but will hopefully show up on the next chart. But it's up here around 101 and a half, something like that. So let's go ahead and so we get the Dow. Let's go to gold. Where are we at? Half past the hour. So gold's still hovering right in here. We're starting to get a bit of a forecast higher, and the algos are all telling us that momentum's going to increase a bit. We'll see. We've got treasuries and gold heading in the same direction. Okay. Usually, gold likes to rally if the interest rates are dropping, but we'll see. It looks like they're in pretty good shape. I mean, let's blow this up a bit. You can see we've got a pretty decent forecast for gold heading to 3,600 plus. So maybe it's got to play catch up with Bitcoin from that standpoint. Let's take a quick look at the weekly. Haven't looked at that for a while. Yeah, see the 200's on this page. I don't know why it's not calculating on the dollar. But here's the gold, and I've been talking about this for a while, is we've got this caterpillar, I call it the caterpillar formation, where you get these ridges on the market grid, and we still have this upward slope. Everything's pointing towards getting to somewhere between 35, 36.20, something of that sort. So that's happening. And so go back to the indicators here real quick. But you can see here we're still seeing, even though the markets, the PPMs are forecasting, I mean, look, I've told you this before, the fact that it looks like the market's going to go down, what's happening is the upward momentum is dissipating. So the probabilities, this 21 here, if we're below the second derivative right now, so we should test that value. This is a weekly chart I've got on the screen. Just don't think it's a daily number I'm talking about. But when we get to that number, you're looking at 20, let's call it 3,000 at that number. If you see anything that looks like 3,000, that's the best buy you're going to get on gold for a while. But it looks like more like the 10 period moving average, 33.40, maybe a 33.20 print. But we should stay right in that level and continue to climb up in this range here. All right, let's do Bitcoin. So Bitcoin did manage to get that RTX sell signal. This is a weekly, actually. So it's saying that even though we printed a new high here, let me see here, 123,236. And then the upward fib target here is 130. That's what I was talking about on the opening comments. 134 is this first target here. So let's blow this up. So this right here is the big targets for Bitcoin. So 133 is one. Let me get the exact 134, 213. I'm going to blow this up so you can see it. Over here on the bottom right, 134, 213, 157, and 171, 200. That's the targets for this range here. And if we look at the PPMs, they're staying positive, but it does look like we come into the end of August that, I think we've edged out a new high here, and it looks like we're going to do a soft roll here, and maybe we print that 134 number. I was talking about a number of weeks ago. We were talking about the 121 number. That's been satisfied, 123, 236. And then the next number was 134. So I think if we do hit 134, we get up there, then we'll see a flattening, and we'll see what happens to momentum if we print those kind of numbers. Right now, momentum is waning a little bit, but it's very, very strong. It's at 1.42. This is basically a parabolic level. And that's why when you see the data sheets in the Substack account, when you go to my Substack newsletter, that is talking about this parabolic rally. And when you get in that whole number, especially 130 plus 1.34 or higher, you're going to be in a screaming bull market. So there's a lot of momentum behind this, and that momentum will stay evident all the way, even when we come over here and we look at the values here. Yeah, we're good until really September that we're going to see this positive momentum. So hitting 134, it could print this entire sequence. It could print all the way up into the fib target. The higher number is 157 plus, but 134 is your next target. That's the one we need to cross that hurdle first. You look and go to the daily, see if there's anything showing up there. Yeah, let's just bring in the daily chart here. So there's no Fibonacci targets. We're getting potentially getting what I call a dragon head formation. We've got good support all the way down to 118 and change, and it does look like it wants to flatten off, but there's still a slight upslope, and these numbers will adjust once we get things going. But look at the ppm1 is 0.98, ppm2 0.57, and 0.41 ppm 1, 2, and 3. Those values tell you that we're in a robust uptrend, and that there's literally on the 10 period moving average at that value right now at 0.99. There's only 3 out of 10 times would even penetrate that 10 period moving average. So 70% probability right now that it holds the value of that SMA, and it's not even close to being in the picture. It's going to be 4 or 5 days from now when we get into maybe into July, the third week of July, 21st or so. At that point, it'll come into play, and that's it. That moving average is projected to be 119 plus. So chances are we're going to stay above that 118 and ride that value. There doesn't seem to be. This is the bad news of the summer, the summer blues, right? The summertime blues, is there doesn't seem to be anything that is going to come into play that is going to rock any of these markets. All these risk-on markets. There's nothing there. Does look like maybe there's a shot for the dollar to go higher. There's a shot for the 450 range on the treasuries to be challenged, but overall pretty stable. Not a lot here. It would take an unknown event right now to break these markets out of the trend phases that they're in, and so we still have upward bias on the S&P. We still got upward bias on all the equity indexes, and then we've got also Bitcoin, and then the treasuries are what they are, but there's even an upward bias there for yields to continue to go up, so that would be a downtrend in the bonds. All right, folks, let's see what you folks are talking about. Hope you got some good questions, and then we'll check out early today. Yeah, I haven't looked at Dogecoin since Saturday Night Live when Elon was on. I remember I bought it. I was smiling. I was making all this money, and then Elon said something stupid, and the thing collapsed. Yeah, man, William, I do owe you that. I need to. That's a really good question. You've got the commitment and impact of blockchain on industrial companies that use it for their maintenance programs like XMM. That needs to be looked at. Let's see here. All right, let's. Yeah, Mr. T, yes, new studio is coming. It is cranked up with the Ultra 3 chip. Man, I'm not messing around. 96 gigs of RAM. I went for it. So, yeah, Ukraino TV, just looking at earlier comment you made, is there a chance for a 5-7 pullback? I don't think so. I think what I laid out here today, we're still within those constraints. There's still basically strong underlying trends hanging out there. Somebody was talking. Do your indicators work on a cell phone trading view, or do you need a desktop or a laptop? Maybe some of you guys can answer that. I've never used them on my phone, so I don't know for sure about that. So let me just see. Yeah, not matter of fact, no, not moving to Texas anymore, unfortunately. Um, that's a long story. That's a long, sad story, actually. So, yeah, I'm not going to light any more screens up. We'll probably call it quits here. Um, yeah, I think these markets are just locked down. I mean, we'll see if we can get any volatility even coming into the Fed meeting next week. But there's nothing. These earnings. The only good thing is, well, let's see if the PPI or CPI and then PPI plus some earnings that all the banks are coming out on Wednesday. But I can't imagine there's any surprises there at all. You know, I just don't see it. So maybe that's when you get complacent, something will blow up. But for right now, even all of the levels of support that I just went through and the overhead resistance is really just the all-time highs. I mean, you could easily trade up to all-time new highs. It takes one good day from where we sit right now. So it's not that big of a deal. I think the NASDAQ actually squeaked out a little bit of a new high today. But the point is that, there's that thing I talk about, those who've been around the channel, the VIG. There's no big momentum or anything to really push anything. There's no news. There's nothing. I mean, it's terrible, and I think that a Q3 and 4 is going to be like this. I don't know that, the Fed tariffs. I don't think I don't see anything. Everything is in front of us right now, as far as you can see. And that's always a dangerous time when things are hidden and you get a surprise or something comes in. But for right now, you're not even getting that. So anyway, I think we'll call it quits here, folks. Appreciate everybody showing up. I'll be back tomorrow, same time. I warned you that there's a potential on Wednesday or on Thursday that I might not be available. So this could be a short week. I've got some family stuff going on that may interrupt some of the flow, but we'll see. Long as certain things don't happen, I'll be fine on that. So anyway, thanks again for watching. Appreciate it. Hit the like button. Get the indicators, kendallreport.com/indicators. There's going to be a release of the data sheets coming out. That's happening. And get the Substack, because that's where you get a little more micro view. And those typically come out around 5 or 6 o'clock in the morning. And somebody asked the question yesterday, when do I sleep? I have found it one of the best times for me is I've been doing most of my trading London hours, not even trading U.S. hours. I usually shut it down at about 6 a.m. Eastern time and then come back in last couple hours. But been doing most of the trading. Tell you, for me, it's one of the best trading. Liquidity is good enough and lots of volatility. Hour before London and all the way into the U.S. Open. It's usually pretty good. Last night was pretty stagnant, but for the most part, you get some pretty good moves. Anyway, folks, thanks for watching. We'll see you tomorrow, same time, same station. See you then.